The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And today, of course, being the, what day of November is it? I wrote down about 10 times, so I should remember. 17th of November. And halfway through the month, actually a little more than halfway through the month. And very interesting session yesterday. Let's go through this. We've got the S&P up 850 right now at 2,056. See that? Let me just do this. This is the 120-minute chart. So on the left, you've got the daily chart. On the right, in the middle, you've got the weekly. On the right, you've got the 120-minute chart in this particular sequence. And what we've got is from the 1998.50 low that was made Sunday night after that very big gap down early on in the evening, there was a tremendous rally, and that rally went through to yesterday and continued into today. You've gone from 1998 to 2060. That is really a big move. It's even bigger than on the way down, because on the way down you had that hiatus. Remember, you stopped on the 12th all the way through the 13th, and then you broke down again after that. This way it's just gone straight up. Now, I've got this as leg F in the 120-minute chart. I've got the 120-minute right here with a V-shaped pattern. I've got a left side, right side price time match. It went beyond. It just took one bar later to break that resistance of 2,057.50. Went through the spike. The last half hour suddenly saw that upside spike. Show you the 10-minute chart right here. Now, this is going to be very interesting because the start of this last move in the 10-minute chart was at 20. This is for the day traders, 20.45.75. That means that after that peak D, the left side, right side price time match look right from there, left side to the midpoint, to the plumb line, to the right side, saw a break of 25 cents to a lower low. That means that this can't be E because you started off the rally at the trough that had 20.4575 as the low. So if you go 25 cents, because you move in 25-cent increments, once you break that, you started a brand new buy mode by going from the low, the new low, to the new high. That implies that it might be a little tougher to do, but there could be a new push to the upside that takes the E-minis above 20.60 to make anything above 2060.75 starts leg C. If it comes in after this break to the downside here. And that says that this trend line that I drew in, this up channel trend line, with resistance going to a C and a D, goes to 2063.25. And a little later on, it'll go to 2063.75 or even 2064. So that's going to be really strong resistance. This will be a single leg A type failure pattern based on some kind of a news, I don't know what it was, if in fact 20.53 breaks its support, and we're at 20.56 right now. 20.53 breaks its support, and you cannot get above this trend line resistance right here, which would be at 20.55. So those are the parameters. My suspicion right now is we're going to go sideways just a tad longer and then start a move. We'll see by the end of the show where they've made a leg C. I think we're going to make a leg C. All right. Now, what does it mean in the full context of what we're looking at? So let me do this. I'm going to get rid of that right over there. Whoops, disappeared. And I'm going to tell you the Dow's up 72 at 17,556. Let me move this away. Right there, make it a little smaller, the 120. Now you can see the monthly charts. This is really important to be looking at monthly charts. We'll go through the Dow. Dow right now up 73 at 17,556. Struggling, I'd say to subscribers in my opening call that I send out the Dow Diamonds, and the Dow itself, I do a detailed study of it. I do this, and then I add to it. And I suggested that the 9-period exponential move, great move yesterday, an engulfing candle type move. And the technicals were a little better, but not great. And it says that the resistance will come in at 17,550s with the 9-period exponential moving averages, and maybe the 17,000 70s to 90s will be very strong resistance. We're going to be watching this very closely. The other thing that I was looking at is, remember yesterday I was talking about the arch formation that makes a circle between the 120-minute chart, 120-minute Dow chart, and 120-minute VIX chart. And that's it. I missed something because when I went through a little earlier, this turned out to be a D in the, that's interesting. I'll have to go through it again. I'm going to G/C, but if it was a D, I should have been a little bit more adventurous in looking at the potential for the upside. Okay, so in the meantime, that's the Dow 120, the VIX 120-minute chart. This is the Trin Index, Richard Arm's Trin Index, and here's the arch formation. And this is going to be really important what happens over the next 2 days, today and tomorrow. Why? Because there's the arch formation. I could stretch it out without any problem to say that it's still forming a very large arch formation. All I can tell you is that Dow 17,800 changes that scenario completely. And you have to think about the upside potential to retest the highs of the 17,977 that was made on, I think it was around about November the 4th. 2116s was high in the S&P, and this one has the resistance to break probably 2077. It's at 2061 right now. That'll change that arch formation. All right, so we've gone through the little nitty-gritties. Let's go back to our story, and we've got the parameters for the Dow, 17,000. At 17,590s to 17,620s, I have to consider that there's a potential V-shaped pattern forming, and that we will not coming back to retest these lows at this particular moment. The low that was made yesterday morning. And the support, therefore, has to be at 17,490 to 17,470. Take that out, and I think we're heading back down again. So the S&P has a similar configuration. And at this point, it's bumping up against this 9-period exponential moving average resistance. Is at 2060 up 7.79. This is going to be very important. Why? Because it's above the 200-period exponential moving average. It only went below it for one bar. It didn't test, unlike the Dow, it didn't test the 2017.22 low of the 21st of October. And that suggests that there's a little bit more strength in the S&P. And you're looking at the peak B that was made in the weekly chart. I have to tell you, I said I'm looking at the longer-term picture. Look at the S&P monthly, still above the 9-period moving average of 20.30. And the MACD and stochastic are not that great, but the weekly MACD and stochastic are improving some at 81%. Got to watch this real closely. Now let's go to the QQQ, 1, 2, 3, QQQ, 1, 2, 3, not 2. And what do you get? You get the QQQ right now is up 46 cents at 111.88. It's got 113.20 something, I think it was. Oh, yeah, 112. I mean, 112.35 is the 9-period exponential moving average resistance. It's at 111.87. Support is going to be absolutely imperative. It has not got as good a chart pattern as the Dow, and certainly not as good as the S&P. And that says that the QQQ series, while it is a peak B in the weekly chart, there's no other way I can count it. Watching it just real closely, because by Thursday, if 112.70 to 113.20 is being achieved, rather than sliding back to 110.80, you have to consider that this is a big positive. Now, look, think of what happened in Paris, of the terrible, terrible tragedy in Paris. Think about the markets on Sunday night. They plunge. Everyone's thinking, oh, my God, geez, the market's going to go down again. And then what happens? The market turns around and has a huge day yesterday and is, again, up almost 100 points today. That's the dichotomy between listening to the news and looking at chart patterns. Remember, I showed you that for my subscribers, I said that from based on the Dow Diamonds 120-minute chart and the Dow, but the Diamonds is the one I featured. There should be a pretty good bounce, and that's what we've been expecting. It was a little bit more than a pretty good bounce. It was a really good bounce yesterday. So we're watching that closely. Okay, so that's the QQQs, the IWM. Now, this is very interesting. Why the QQQs on a weekly basis have made a new recovery high. The IWM, if I can do this, yep, IWM looks like the New York Stock Exchange. It's just a lousy pattern. It had a Chapman wave leg, body, neck, head, beak. Oh, this is going to be very interesting. Beak pattern. If this beak is going to, sometimes I say that after the stalk leg beak is completed, we don't know yet if it's completed, there's usually a very powerful move to the upside, but then you have to use other techniques to continue. That's all it says. Sharp reversal, watch out when it happens. So the IWM at 115.48, up 43 cents. Hey, it needs to take out 116.03, the 9-period moving average, very soon, by Thursday. So in other words, what I was looking at for subscribers, Monday, sharp move. Tuesday, another move to the upside. Wednesday, a doji candle. And then Thursday's, that's the proof of the pudding. Because if there's another sharp break to the upside, that's very positive. If there's a reversal, then the bounce is pretty much completed. That's the way I'm looking at it. So IWM over 116.10 positive, under 115 not good at all. And now I've got to show you the New York Stock Exchange, NYA.X. It's okay. It's not a great pattern. Monthly chart has held the up channel, but is still struggling at the 9-period moving average. NYA, the big broad 2000 stock, New York Stock Exchange, struggling. That's all I can say. Struggling. RTH. That is the retail index. Sharp move up today, up 1.11. Yesterday at 76.13. Yesterday it was equally sharp to the downside. Oh, wait, what am I talking about? Yesterday was a sharp move to the upside. I didn't even see that. That's a candle right there. Gee, that's even with some of the bad news from the retailers that we just got earlier this morning. Whoa, island reversal to the upside. Cannot ignore that. So we just make it real simple. RTH, the market vectors retail ETF, trading at 76.13, up $1.11. It has made an island gap so far, with a huge gap, in fact, between Friday's down candle, Monday's up candle, back above the 200-period moving average, and today's gap up spike opens at 76.11. 76.11. Yesterday it closed at 75.02. So this is a big one. This is a big move. Got to watch it real closely. Okay, days young. I like to always say days young. And here we go. Monthly chart is the one to watch because it's still holding really well with all the bad news and some of those retailers. Dick's, what is DKS? DKS. Yeah, Dick's Sporting Goods gaps down today, 13% at minus 554. I didn't have this notated. I used to have it notated. I don't. Anyway, the fact is that it made a right arm extension and then failed. Hit a high of 60.33 back in April. Trading now cut in half. So not good. Not good at all. So let me just finish up here. I now want to go quickly to the gold. Gold is in fact down 9. Very poor chart pattern. But this is very interesting because I believe that the dollar is possibly in leg F, although it has the characteristics of a breakout. This is leg F in the dollar. You know what? I won't rush through it. We'll be back in a moment. Dow's up 83, S&P's up 9.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. Just busy typing in here. Zootis, I was asked about ZTS trading at 45.71 up 41 cents. Looks to me like it's going to make a peak D, a leg D in the daily chart. It keeps making the 200 period exponential moving average support up nicely today. Needs to get above 47.14 at 47.15 starts leg D. MACD is good, making that H pattern, looks like the dolphin pattern, and the stochastic is rallying, but not that great. So the price is going to drag the stochastic higher, and the weekly chart is real choppy moves. This really looks like a biotech, even though it's actually in Zootis and Global Animal Health. A company dedicated to supporting customers and their businesses in ever better ways. That's what it says right there. So yeah, and the only way it's going to break down, rather than just continue sideways to up, is if it takes out 44, the key support at this particular point short term. But so far, it's acting quite well. This is very early. It's an IPO from 2013. Had a low in the 28s, I think it was, 28.14, and had a high of 55.38 in June. So yeah, it's in the trading range. It's really looking different to biotech companies in the sense that it's holding really well. Okay, let's go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm well, thank you.
Great. Yeah, so question on the IWM. The one thing that keeps me from considering the long side on this in this market is really the IWM. I've been trading for, 10 or 12 years, and it always seems, if I look back at the history, the IWM was always either the leader or one of the leaders, or was never dragged behind, and it still continues to look really really poor even today, considering it's the market's ramped up over the last couple of days. What are your thoughts on that?
Well, this is what I was talking about just a moment ago. Now, what I said to subscribers this morning is I said that this is a very diverse market. In fact, what did I say? Let me get this here because I think I summed it up quite well. Chapman Wave trend gauge worked its magic as the cash indices followed the Sunday evening upside reversal yesterday. Right. Dollar in leg F, GE superb action, GM good, VIX plunging, bonds holding. This all makes for conflicting mixed signals, and that's really the truth of the whole matter. If you look at the New York Stock Exchange and the IWM, the two are going pretty much hand in hand. Let me just do this, folks. Keep your eye on these three charts. Just kind of get a visual impression and keep looking at, say, the middle one. Keep looking at the weekly chart. Now, this is what I like to do as well. Just a real quick, remember in the old days, you used to have those handles. You turn the handle at the fun fair, and it had all those pictures that were slightly out of sequence so that it gave you the little cartoon characters, which is basically how cartoons used to be made. Well, this is what I want you to do. Keep your eye on the IWM, and here we go. And now you've got the New York Stock Exchange. In fact, the New York Stock Exchange is even a little bit weaker. And I'm with you. I'm saying to myself, select upside activity, but very much one by one, like those little fighter pilots I talk about when the jets are making that V-shaped formation, and then they start peeling off one by one until the lead plane is left. So you're getting the disintegration of individual stocks within sectors, but more and more within each sector. And that's really what we're looking at. So it's coming down to more like a handful of stocks already holding the market up. And even that handful of stocks is rotating. For instance, Facebook was looking great the other day. Now it's just kind of, it's not looking bad, but it's just kind of struggling to go to new all-time highs. And that's the way I'm looking at it.
So my ultimate question is, and I know you and I spoke about this a few times before, but I've been trying to get in my 401k with fresh new money for the last 6 years. And as pathetic as that sounds, I keep telling myself technically there's going to be a pullback. And of course, a month ago in hindsight, I'm like, oh shit, there we go. Oops, I should have said it. Here we go again, right?
Right.
This is another good opportunity. So I mean, do you see another good opportunity here to get into IRA and a 401k or?
It's so interesting that you just discussed this whole thing of seeing the market go up yet again, because I am looking at the same thing, and I can't believe it's happened over the last, I would say, 3 weeks. It might be 4 weeks, but I think it's more like 3 weeks. I'm hearing people say, I've had enough. I've even heard professionals saying, I've just had enough of this whipsawing in and out and in and out. I'm just buying and I'm holding. I'm done with getting this short-term trading business. And I said to myself, wow, if ever there was a chance to be a little bit more cautious, the market is saying right now, and let me explain. If you've got a moment, I'd like to just go through the scenario, and that might just help you to clarify and kind of tell you that you're not wrong.
Yeah.
But let me do that. Can you hold on?
No, it sounds good, and I'm using the IWM as my premise for holding back a little longer.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back and we're on with Ben. I just wanted to show a chart, Ben, before we do anything else, because this kind of explains exactly what I'm thinking here. I drew this just a little while ago when I started the show, and I said we made a peak B. There's only way I can count it in the 10-minute chart. That implies that we should go high and we should go towards that dash channel line. That's not with any news. That's with nothing. That's with no technicals, just some channel lines and some left side, right side price time matches, but especially with the Chapman wave notation. And when I go to, when I look at these charts and I try to put the whole package together, and I say to myself, wait, I don't know how many years ago it was that I spoke about the percentage that the chances that we will follow Japan at some point and go to essentially what I call the Japanization of our bond yields is just a high probability. With that in mind, I'm still saying to myself, what can the Fed do? There's so many mixed signals here. I've got a feeling that they're going to have to hold off to do anything with the rates. This is just, you don't know, because you never know what's being discussed. But it just seems to me that that's what I'm looking at right now. And so that says to me that in the big picture, now let me go to the big picture, that the move that we just had, certainly in the Dow, has to be put into the context of the QQQ series, because as I looked at the 10-minute chart, just purely on a technical basis, saying that was a peak B, there should be a C and there should perhaps be a D based on that particular formula. if the QQQ series, now I showed the Dow, keep an eye on the Dow, folks. You got a daily, weekly, monthly, 120-minute chart. Now watch this, QQQ. And all of a sudden, you're looking at something that says, wait a minute, the QQQ's made a higher high, and that higher high, technically in the Chapman wave, has no other wave count, but it's a B. To me, if I put the package together, what I've been looking at is a sideways to down consolidation, but there is a chance that we don't break like many people think, that rates, even if they go up a quarter point, are still going to remain very low, and that the real issue is that most people are being forced, even folks that I know that are in the safety area of bonds, etc., are being forced into equities. That's the way it is. If that keeps going up and giving a good percentage, and I've got a feeling that that probably will not change, because another theory that I've had for years is that if the market survives October very well and goes to close to a new recovery high, or even close to the year's high, there's just a very good chance that it'll try its best to go towards the end of the year, the last week of December, towards the all-time high. So with that said, let me just make it as easy as I can. You're using the IWM, but I spoke about this yesterday, and I said there is a chance that the IWM and New York Stock Exchange are the old school, just as the Dow was the old school in 2000 and the QQQs went higher because it was the new school. And that's really what I think we need to keep our eye on. So I'm going to suggest to you that you use the IWM maybe as some kind of an indicator, but the best thing is to keep your eye on the stability of the QQQ, the PowerShares QQQ Trust, the NDX 100. And I've got a feeling that you're going to get a better result by focusing on support and resistance levels. For instance, the Qs have just completed filling in the gap of 109.80 to 112.07 that was made in that big gap in October, 23rd, and it filled it in the last 2 days, and now is above the 112.07 gap up. So that this is pretty good action. Not great, but it's pretty good in the daily. The weekly chart, however, is still at 92% in the stochastic. So what you've done now is what you've forced me to look at the IWM and the New York Stock Exchange to put them into the criteria of all the little components of the market. But in the criterion that I'm looking at, they are subsidiary to the Dow and the QQQs, which are both acting pretty darn well. So what
I guess, is it more or less because the frustration is just longer term, right? I mean, going back to that, I understand the day trading and the intraday trading.
The longer term is horribly frustrating, because this is one of those where if you've been fortunate enough to be whatever reason, as we were at one point forced to put X amount into the long term, and hold it and not touch it. That's just been the most magnificent thing that you could ever have done at this particular point, because you just
so Fed dependent, right?
You're just sitting there, and you've got this huge leeway now of prices back to 2012 or 2011. So it's unfair, but we want to deal with what you've got right now. So here's what I'm going to suggest to you. This is a very important couple of days. Why? Because by the Friday, if we start to break on the Dow, break 12,000, say 200, 300, 200, that support level, that's it. It's a little early, and we're still going to be chopping around to consolidate the big gains. But if in fact the last 2 days of turnaround holds, and what I was saying in my newsletter, that if Dow turns 17,500 level into a support into Thursday, and I also put in the report that it was a choice between the Dow long side and the Dow short side. I'm just stepping aside for now on that area, because this is very important. The attitude that said there's nowhere else to go is really what's forcing money into equities. So you can do all the technical analysis, you can do anything. When the wind is blowing correctly, it's going to push the vehicle or the boat in a positive direction. And basically we've got the yields so low There's nowhere else to go. So
Yeah,
now
I
what do
agree
you?
with you,
So,
Basil. It seems like the Fed, it's really the Fed long term, and then we can day trade. That's kind of the two scenarios, right?
correct. Yeah, one portfolio says I'm in, I'm in, and I'm forgetting about it, and the other portfolio says, okay, I'm going to work what I do technically. I'm going to do all the other things, but here's
On
the
a very
frustration.
short-term basis. Yeah.
The other thing is we're less than 1,000 points off the all-time high, and consolidations have been rotational. And I admire the fact that the market has seen the IBB tank. It's seen the healthcare pull back sharply. The semiconductors just had a big move up. They were pulling back very sharply. Now all of a sudden they seem to have found their legs on the upside. The restaurants have been tanking. You've got the retail area, certainly in the apparel, not doing well. And yet look where the market is. And I think that's because the wind is really the low yields, and the low yields are forcing money.
Yeah, I couldn't agree more. It's really right. I mean, where do you put your money? You're going to make
So
0.8%.
here's what I'm going to suggest to you. You could even, with the risk of, say, 10 or 15% on a very small position, if the market suddenly takes off to the downside, you could start a small position in one of the indexes, the better indexes, like a Dow or QQQCs, but it's a very small amount, because what it's going to tell you is following it every day, but not trading it every day, is going to give you the picture that says, gee, every time the market should have tanked, it held. Or you say, uh-oh, the market's starting to take news as very bad news. I don't want to increase that holding at all. But it gives you a sense of the left hand and the right hand, the left hand being the long term, the right hand being the shorter term. So that's the way I would think about it.
Is it, Basil, is it too early for you to say that you're expecting at some point another big dip, like a 20%, or is it just too muddy yet for something like that?
If it's going to happen, it should be happening fairly soon, because if we start to break to the upside, I think this is going to be the move that people just say, throw up their hands and say, I'm in. That's all I'm going to do. I'm in. I'm done. I'm none of this listening to anybody. I'm in. Just like I've been hearing for 3 weeks. I heard one person who's just a novice, basically just for years, has a business, and he's in and he's out, and he said, I'm done. I looked at my portfolio the other day. If I kept everything I bought 3 years ago, I would have been fantastic. And this is where I'm in and I'm out. He says, I'm done with that. And then his brother, who actually does this as a full-time as a business, also said, I'm done with the short term. I'm holding in. And I've heard this by about 2 or 3 other people as well. Done. I'm in. So that made me a little nervous. But they haven't been wrong. Right? So all I can say is the monthly chart of the QQ, the weekly chart of the QQs is very important. It's gone to a higher high. That says to me there's all the evidence that it should be a B. We should get a C. It should not break at 112 right now. It should not break under 105 in this particular phase. And I think that so far it's holding well.
Yeah.
I don't think I've answered too much, but I have set in place certain parameters, Ben.
No, you have. I mean, you're absolutely right. I mean, the wind is so strong from the Federal Reserve when they. It's like, where do you put your money, right? If you want to make more than 5%, where do you put it?
That is the issue. It's absolutely this. I mean, it's the only question that's been asked for 5-6 years, and the answer has been put it in the market. And I think it's not put it into the market. You've got to selectively put it into the market. But look, I'm talking about GE. I'm talking about all these other things. So I got a bunch of callers. I hope I've given you some perspective, Ben. I hope it helps you.
Thank you very much.
Thank you very much. Let's go to Scott waiting patiently. Scott, how are you?
Oh, very good, Basil. One thing I wanted to add to your previous conversation when you made the jet airplane analogy is for all the traders, just like a pilot, a fighter pilot, get your rules down. So when the bad stuff happens, that you got your rules written down in front of you and ingrained in your head, and you're not going to get emotional, because if you get emotional, you won't eject, and you'll get killed.
Well,
and I think so many people do that in the last 2 weeks that I have begged them to follow the rules. And they didn't, and, they get crushed when the market falls back. So
let me just ask you, you are looking at Alcoa, is that correct?
Alcoa, and I have just a really a gut instinct, and besides it, there's a lot of big players getting into it very subtly in a very big way. I think Alcoa is going to do something crazy, which is crazy being, $11, $12. So let's see what the charts say.
Okay, so what we're looking, folks, is Alcoa A, B, C, D in the 120-minute chart. Had made a peak E way back at 9:58 on the 3rd of November. Pulled back very sharply down to the most recent low of 7.81. Had a round number high and open of 8, and then it turned around the next day, took that out. So this is, I had a caller yesterday, and we were looking at. We looked at, well, I think it was, that Mark wanted about AK Steel. And I said, I just don't see anything yet in AK Steel. And look, here it is, still stuck in the 256 level. And X is US Steel down 15 cents. It went to a lower low today. And yet, when I was looking at the different aluminum and steel, I looked at Alcoa and I thought, gee, that was a nice candle yesterday. Very strong, actually 2 days worth of candle, Friday, Monday, and today. And I think you are right in the sense that Alcoa, there's something going on with Alcoa that's allowing it to attempt a double bottom here. But at the same time, it has to be news related to be able to sustain the move. In other words, you've got to hear that certain people are now putting money into Alcoa. Why? Right. I'll tell you why. The chart itself on a monthly basis is really a very poor chart, but it has gone to the D that we always look for on the downside in the monthly chart. This is leg D. It did not take out the 763 low way back in 2013, and yet it did double bottom and close lower than the 797 was the low on the 28th, the week of the 28th of August. 7. So let me just do this slowly. 797, and it went to 781. Oh, and it closed at 799. So it closed 2 cents above. That's right. Really important in my work. So here we go. Yep. This is the way I'm looking at it. Because it did that, it has an opportunity now to go and rally to the next level of resistance. What is that next level of resistance? Well, the first level is just touched today was the 9-period moving average of 842. The very next one is 897 in the weekly chart, the 9-period exponential moving average. I still think it's early in the move. And that's another reason why we need to be looking at a variety of sectors and saying what sectors are ready to take the lead. And I'll look at the XLF later if I have a chance. So let me do this real quickly. I think that you've got Alcoa. Is that something you bought today or yesterday?
I've had it for a while, and I've got some in the 9 range, and I bought it all the way down, obviously, into the 7. It's a massive position. And I think, you hit it with the news thing, too. I think a lot of this, I think we're going to just build huge momentum towards the election. And I'm not saying that Trump's going to solve all the problems, but that's just the way us Americans think. And I think we're going to see a tremendous move in Alcoa, CEMEX, companies like that.
So as I'm looking at this right now, let me do 2 things. One is, I think the move that you've got, so that let's just say your average cost will be, say, $875. Let's just imagine that. So if your average cost is it lower than that?
No, I'll hold.
Okay, you'll hold. All right, so folks, we're going to we'll do this when Scott gets back. We'll just quickly look at Alcoa, see what I'm looking at for the upside and what the support at 823 means if it touches that, and then we'll go to Greg in San Mateo, California. We'll look at GLD.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We're back with Scott in Safety Harbor. We're looking at Alcoa. So, Scott, all I need to say is this: you're already in the position, but my only criteria here is that the price is the arbiter of the trend. Alcoa at 840 needs very much to get to the I would say 860s, but I'd rather make it a little higher, the 870s by Thursday, without sliding underneath, and I'll tell you right now what it is, 823. 823, if it starts to trade under 823, you have to be a little careful because it hasn't built up enough momentum in the technical indicators yet to sustain another down move by holding well. My guess is that the technical indicators will start to deteriorate if it pulls back 25, especially if it pulls back about to 810, then you just got to be somewhat careful. But in the meantime, you've got your trade, you've got a nice lift off, you've got 3 good candles. I would just say to you, be a little careful of being waiting too much for that $9 area if in fact it pulls back over the next 2 days without
Well, believe it or not,
trying to
Basil,
pop.
I'm so worn out. I mean, I feel like I've been in a battle the last 6 months. I'm so tired at this point. I think I'm going to subscribe to what you said earlier, and really just kind of leave something in the oven for a change. I never do that, but I'm so exhausted. I just feel like doing it because I have missed out on a lot of big upswings from Gilead to Alcoa to everybody else.
Keep in mind that when you change your modus operandi, you are vulnerable to being wrong the first time. So in other words, if you do that, I would not want to sit with an Alcoa with an ugly monthly chart in a long position if it takes out key support. I'd do it with other stocks, but I wouldn't do it with stocks that are making new lows because, stocks that make new lows continue, stocks that make new highs continue on the upside. I got to run. I got a caller
Can't wait
waiting.
to hear your take on Gilead with the next caller. You know that's my favorite.
Okay.
Thank you. Bye-bye.
All right, thank you. Greg in San Mateo, how are you?
I'm well, thanks, Basil. How are you?
Well, before we run out of time, you want to look at GLD. Do you have a position?
No, quickly,
Okay.
is on 11.6 in the daily, is that peak D?
11.6 in the 10.15 was peak D with a doji candle in the GLD.
10.15.
And trough, you mean on the way down.
The downside.
A, B, C, D. This is actually EF. Now, I want you to do this real quickly before we run out of time.
Well,
the DZZ, if you don't mind, I just want to say the DZZ is the DB Gold Double Short ETN, and that's in leg F/B. It's a slightly different chart pattern to others, but it's very similar to the GLD, and it's extended. I wanted to tell you that the dollar right now, the dollar is in possibly leg F. It could be an alternate count. So before, the question I had is, did you say you were long or you're just watching it?
No, I'm just watching. I'm wondering then if the 11.12 to the downside is a restart, and that's an A.
Okay, great question. So it's an alternate count because it was so A, B. You know what? If you don't have the position, let me do this. I'm going to put it on the front of my list tomorrow, and I will talk about this because it's the restart and the downside. Great that you got that observation, that you got that technique in which to do it. And the question really is, so this is D. This could be E/A.
Yeah.
And if it's E/A, when I look at the upside, I like to look at the mirror image. So the DZZ is in F/B, it turns out, right? So if that's the case, when I'm looking at it as B and the stochastic is at 94% and the MACD is still strong, I'm thinking, hey, this is a little bit like the dollar. Maybe it only pulls back a little bit and then extends even higher. So how about tomorrow? I'll put it on my list. I'll do the rundown of the market. If you don't mind, I'll put down exactly what I'll be looking at because we might be within a day of some kind of a turnaround in the dollar and gold, and it's really appropriate to be looking at it. Thank you so much for calling about that, Greg. So it's Greg in San Mateo. Basil Chapman signing off. Dow's up 93. S&P is up 10. I'll be back with Tom O'Brien later on this afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.